Welcome to Trading Nation. I am Brian Sullivan. We are very pleased to be joined by David Herro, Chief Investment Officer at Harris Associates. He's also Morningstar's International Stock Fund Manager of the Year for 2016 and has been featured on magazine covers as one of the world's greatest investors. Was that enough of an intro for you, David? Welcome.
That's fine. Thank you. That's way too much.
No, it's not. Come on, you're very much too modest. All right, David, we've talked about it a little bit, but it's heating up, which is, you invest around the world, but a lot of that is also in Europe. We've got this rise in nationalism in France. There's a lot of concerns that forget about the Brexit. We're going to see it maybe from France. Well, other nations, there's a lot of political turmoil in Europe right now. Is that creating opportunities for you, or are you avoiding European stocks?
Political turmoil almost always creates opportunity, and it does so for a very simple reason. It causes share prices to move up quite aggressively, whereas the underlying intrinsic value of those businesses, which are based in these sovereigns, the intrinsic value doesn't move aggressively up or down. And so with prices moving and value not, it creates opportunity, especially if prices move aggressively down and value per share keeps going up. That gives us a nice opportunity to take advantage of the market's impatience and obsession with geopolitical events.
Yeah, and do you think that we are, not we, you and I, but we sort of collectively are over-worried? I mean, the markets have done pretty well, so the markets have said things may be okay, although maybe that's just part of the sort of overall global reflation trade, and maybe stocks should be even higher than they are.
Well, I think for the U.S. valuations in particular, you need to have some follow-through on earnings growth, which I think we will have. I think in Europe and in some other places in the world, share prices still aren't even projecting any kind of a recovery. You see very, very low valuations on what I feel are low depressed earnings. Maybe the only exception is Japan, which only seems to move if the exchange rate moves or stimulus exists. There doesn't seem to be a structural reason for Japan to move. But Europe, I think, you're starting to see better economies throughout the continent, and you have very low prices. So low prices at a low point in the earnings stream means, I think, high potential for stock price appreciation.
And will the banks, you've loved Credit Suisse and UBS, I believe, for a long time. Do you still love them, and do you think the banks will be the ultimate beneficiary of any reflation trade overall?
Yeah, we haven't been in UBS for a while, but you're right, we are fairly big position in Credit Suisse. Recall early 2016, the banks were dead in the water, and they were dead in the water for a combination of reasons. One is, as you mentioned, low inflation, deflation, low negative interest rates is not good for lending spreads. But despite this, the banks managed to earn money. They earned money because they cut costs. They earned money because they increased fees. They earned money as loan growth started to pick up. So even with the pressure caused by the low interest rates, banks in Europe are still able to grow or hold earnings steady, which I think is very, very counter to what people thought last January and February. And as we went through the year and started seeing these earnings reports, you started to see not yet, even though we haven't not yet got this inflation there, we're starting to see it a little bit. You start to see interest in bank shares only because of earnings sustainability. Now, if we start to see some higher inflation and maybe we start getting off these negative rates, that will be the second and more powerful punch that leads these shares higher. Eventually it will happen. You won't see these low rates forever, and when they start to come up, the banks will benefit.
Well, then what's the risk, David? What's the risk? You're always worried about risks to your thesis. What is the biggest risk then?
Yeah, I mean, the risk always has to do with, A, on a company basis, poor choices made by management teams. Do they overpay for assets? Do they overinvest in an area which will not bear them fruit? Are they missing opportunity? So first and foremost, it's really the micro risk. And then you look at their balance sheets. Do they have balance sheets to withstand a slowdown in the economic environment? And then, of course, with that is not only a slowdown, but are they able to withstand geopolitical macro shocks? Now, oddly enough, most companies are able to do so. But when you analyze a business, you must be able to determine how and where they are exposed. Are they exposed to trade protectionism? Are they exposed to, say, a new Basel IV? And this is, all part of being an analyst and an investor is trying to understand the risks and not just parroting what, you hear in the mass media. Oh, the French election. My guess is there's going to be a big surprise come this French election, that the, quote, populism wave isn't always as omnipresent as we believe. And, and I think sometimes as soon as these things pop up, they pop down.
Well, it's great sanguine advice. And you're a longer-term holder, David, but is there an area lately, a stock or a certain country or region that has caught your eye, that is kind of a new position for you?
Not too much new. We have increased our exposure in EM a little bit. We were almost down to zero a year or two ago. But, we own stocks, emerging market stocks like Televisa, which to us is just a really, really strong, meaty asset. But because of all the fears about Mexico and the weak peso and all of this, you saw the stock drop. We do have a holding in Samsung, and again, despite some negative headlines on the phones and now on Mr. Lee, but still they have almost the most defensive position you could have in memory and semiconductors. So there's some areas in EM where we've found some interesting names. Recall in the late 90s, we were way overweight. And then as we got to 2014, 2015, we got to zero weight. Now we're 7 or 8%. And as I mentioned, the other area, I think the area of most acute value today is in a lot of these European financials, not just the banks, but take an insurance company like Allianz, which actually has a lot of surplus capital, and they're giving it back to the owners. This is something I wish the Japanese managements would take note of. And this is one of the positives of European companies. They're finally starting to get a bit more focused on this whole notion of shareholder value. It seems so elementary. But when I started in this business in the mid-'80s, it was really tough in Europe to find companies that thought that way. And now you see a lot more of it. And that's, to me, a huge positive.
Well, maybe they've been finally listening to you, as we are. David Herro of Harris Associates. David, it's always a pleasure. Don't be a stranger. We'll see you soon, I hope. Take care.
Thanks, Brian. Good to hear from you.
Thank you.
Okay.
David Herro, folks. Thanks for watching Trading Nation. Some really interesting ideas there. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.